Hello and happy Easter weekend to all of you. Welcome to the Trading with Ashley show. Hey, can y'all do me a favor, a real quick favor? If you appreciate content like this, especially on a holiday weekend where there's not a lot of content going on right now, if you appreciate that, will you do me a huge favor? Will you please, don't worry about pressing the like button, but press the subscribe button. I have about 35% of you that watch the videos, but you're not subscribed. And let me tell you why you want to be subscribed. I'm dropping a lot of great information to help you prepare for the week that can make you money. But in the coming days, I'm going to be announcing something pretty exciting. And if you're not subscribed, you're going to miss out. It's going to be a limited opportunity. All right, now that we've got that taken care of, let's go on to the content for today. So today's video is going to be a spinoff of a very popular video that I have done on the SPY and QQQ leaps. Now, I had talked about establishing my position in the SPY and QQQ if I wanted to generate regular income by selling weekly covered calls against my leaps. Well, in this environment, I've actually been selling daily covered calls, and that has been working out really well. I have an exact formula that I have shared with my members. We go live a couple of times a week, and I have shared the template with them. Now, if you do join my community at any point, you will have access to that training. But it's been working out great in this environment because in this environment, you're going to want to take wins wherever you can get them. And I don't like going out right now further than a day if you are going to do a poor man's covered call on your leaps, just because one tweak could totally change the dynamics. And I don't want to be sitting in a covered call against my leaps that could get me into trouble if it's 2 or 3 days out. So I'm playing it safe. If I have to buy it back, that's okay. If I have to buy it back, that means things are running high, and then I will be compensated for that if I just leave my leaps uncovered for a little bit longer. But the biggest question I'm getting from you, my viewers, is it time? Is it time to buy a leaps? By the way, if you just have in your budget enough for one of these instruments, the SPY or the QQQ, I have found that the QQQ pays a lot more premium. And so I am really starting to concentrate more on that for daily and eventually weekly premium. So that's just something to note if you have limited funds. Plus, the QQQ is lower than the SPY, so it's a lower barrier for entry. But you're probably wanting to know, is it time? And of course, I can't predict the market. And so the only way you can make that decision for yourself is to understand how to predict if this pulls back. Let's say you go ahead and buy one of these right now. If the QQQ continues to pull back, well, how will it profit for you? When will it profit? How risky is it? And there's a couple of things you can do to mitigate the risk. You can put a stop loss on your leaps if you purchase one. And I always encourage my students to do that, because if it pulls back, let's say you do a 20% stop loss. Yes, it doesn't feel great to lose 20% of something you just pay for, but gosh, it's so much better than losing 50%. And if we're heading back down and we're going to pull back again, well, then you can save at least what's remaining. And then once you feel like the market has settled down enough, keep an eye on that VIX. That'll tell you whether or not it's going to stay down for a little while. But once everything has settled down, you can redeploy those funds. So I always say it's okay to be a little wrong. You just don't want to be a lot of wrong. But if you want to look at whether or not this is the right time, I am going to show you exactly how to calculate this for yourself. So you can determine your risk, you can determine how much money you want to deploy and how you break it apart, whether you want to put all of the funding that you put towards this instrument out there now, or whether you want to buy a little if we pull back more, either stop out or average down. There's such a variety of ways to actually do this. So let's go into the computer. I'm going to show you exactly what to look for, and then you will be ready for Monday, whatever it brings. Okay, I have a lot to review with you, so put your thinking caps on, and I'm going to take you through this step by step so you fully understand what's at play. The first thing I like to do when I'm evaluating a trade is I like to look at the technicals. And so what you want to do is look at where the QQQ is trading right now. At the time of this video, it ended the day at 4:45, the last session. And it looks like right now it is 42 on the RSI. So the bears are still in control, but it's trying to fight its way up. And if it gets over 50, we know that we are back on top and we will hopefully continue to surge. That's one thing, if we can hold 50 on that RSI. So right now I am going to look at the 3-month chart because that's a good indicator with all the activity we've had in the last couple of months to see what might happen. So we can see right now we are in the bottom part of the Bollinger Band right here at 444. The middle of the band is 460. This is the 20-day moving average, the way that I have my charts set up. So our first order of business would be conquering this 20-day moving average and hopefully staying above it and using it as support. You can see right now it's been resistance, but if we can get up right up on top here and then allow it to start bobbling up a little, then it would be support as long as it doesn't creep back below that. And then the next order of business would be to see how it reacts right here to the 200-day moving average, currently at 492. Now, we can see right here that it headed right up for the 200-day moving average. This is on 326, and then it was rejected, and down it came. So if we can conquer the 20-day and then conquer the 200-day, we're back off to the races. So the two figures that you might want to write down, because you're going to use these later, is write down 460 so that we can take a look at how the leaps we're going to purchase, what it might be worth if we can regain 460 soon. And then go ahead and write down 492 because we're going to need that as well to see as time moves on if we can regain or when we might regain that 200-day moving average. The next order of business is to go to an option calculator and start looking at possibilities. Now, if you want to go out to 2027, December 2027, right now it's the longest date on the chain. And if we believe that we are going to be able to move forward in the coming years, I mean, this is 2.7 years away, then you would want to make your investment now and go out as far as possible, as much as you can afford, as long as you are using good stop loss measures so that you're not paying so much money for something if we have a more dramatic leg down that you just lose a little bit. And we talked about that a little bit earlier. So if you're looking at the $400 call right now, and this would be your leaps, it looks like right now that is about $11,000, almost $11,500 is what you would pay for it, which is a lot of money. So let's see how much we can make off of that. Well, remember those figures that I had you write down? Let's look at them. So if we were to make this purchase now and we reclaimed the 20-day moving average, that would be at 460. Let's see how much money we may make on this. Now I'm going to adjust the range that we're looking at, and I'm going to pull down this implied volatility just by a little. It's not super high right now, but it will probably go down once the VIX settles down a little. So when you normalize everything on the chain, something that you spent $11,500 for, once we get back up to 460, let's see if we're making any money. Here's 460 right here. Well, if we do that in short order, so by the end of April or even by the end of June, we're already ahead at that point. It looks like almost $1,000 if we do it quickly in April. If not in June, it looks like we'll be ahead by about $700. So that's positive. But let's also look and see how we may be able to look at reclaiming that all-important 200-day moving average. That's 492. Now, that won't happen instantly. If it did, I mean, that'd be really great because you can see if we go up that high, let's just look at this 493, then very quickly, if we reclaim that here in the next couple of weeks, and that's a $3,700 profit. But more than likely, that is something that could take place as we move along in time. The reason I'm showing you this is if we pull back and you see your leaps turn red, you just have to go on an option calculator and determine what will it take for it to be green again. Now, I'm going to show you a little hack because you may already be in one of these right now and paid for it. And right now it's showing you what it's costing now. But if you go up here to the top and you just click this button right here, this is on Options Strat. You can adjust this pricing to what you actually paid for it. So let's say you bought it around April the 7th when everything was really beat up and the QQQ had come down at that point to about almost 400. So if you bought that, then you only paid about $8,800 for it. And right now you're sitting in really good profit, as you can see, because you went ahead and bought it when it was very low. And so if you want to wait and to see if we get back to that level, then you can see how much it would grow if it just popped up just a bit. Now let's go back to what it is costing today if you were to buy it. So here we are back at the original screen. Now we want to see what this might be worth in the coming years. Well, for us to better understand that, we need to look at a little bit of history and see actually how much the QQQ has grown every year, looking at the last several years. And then we need to put a projection in for if the QQQ grows by, let's say, 10% or 15% in the coming 2 years. That will show us how much these will be worth. So let's go do that now. If you go back to 2020, you can see right here that the annual growth rate was 48% on the QQQ. It explains here this was the tech boom, it was the COVID recovery, so that was the fuel that allowed this to grow by almost 50%. Now looking at 2021, it grew by 27% in a year. That was the strong tech momentum. We understand that. 2022, it went down by 32%. And that was the rate hikes, inflation fears. Does that sound familiar? That's something that we're dealing with right now. So you can see the QQQ is great when it's heading up, but you need to be able to withstand a drawdown. This is why a stop loss is beneficial. If you had a stop loss on a purchased leaps and we kept pulling back, then you would be out of it long before you realized a devastating hit, like a 32% drawdown. Now, on to 2023, we enjoyed a 55% growth rate. That had a lot to do with NVIDIA and everything AI. Now here, 2024, we saw a more modest growth for the QQQ, which was about 25%, still very stellar. If we get back to positive and it grows at about a 10% rate, let's look at some figures. It will be more than likely closer to about $489 at the end of this year if we just grow by a modest 10%. If we go a little bit higher and we grow at, let's say, 15%, then we're looking at about $511. All right, let's keep the party going. Let's look at 2026. If we have 10% growth rates each year, 2025 and then 2026, we're looking at about $538. At the 15% mark, we're looking at $588. Now, let's stay with that theme. If we continue to see just a 10% growth over the next couple of years, at the end of 2027, when our leaps is actually expiring at that point, the QQQ would be at $592. And if it's at 15%, we're going to see it as high as about $676. So the reason it's great to see these figures is you can now go back on the option calculator and we can plug in some of these scenarios and determine how much this might be worth. Keep in mind, we can look at the negative as well, but if you put a stop loss on, then you won't have to worry so much about that end of the equation. Now back on our option chain, let's take a look at how this may profit if, in fact, the QQQ does move forward in 2025. If we get to $489, you can look right here, $489. Let's say that happens towards the end of the year. You're looking at about a $2,500 profit. But what if we have the 15% growth for 2025? That's going to be closer to $511. And so look, you're looking at closer to about a $4,500 profit. Moving on to 2026, let's look right here at December of 2026. If we go with that 10% growth rate, 538, then that's going to be right here. It looks like this would have profited about $4,500. If we go with 588, which is the 15% growth, then you're looking at a lot better situation. You're looking at about $9,000 profit. And finally, looking at closer to the end of the life of this particular leaps in December of 2027, if we stick with that 10% annual growth rate over the next few years, you're looking at about $592. So that would put you right here. It looks like that would be about an $8,000 profit if you went ahead and cashed it in the October timeframe. And if we went with the higher 15% growth rate, you're looking at something around 676. So let's go up to the top here, and then things are looking much better at that point, because you could be anywhere between, let's say, 15,000 and maybe 20,000 in gains for each of these leaps that you purchase now. So that will help you determine what the price may be at the end of this. And then that way, if you do see pullbacks, you can go in and manipulate the data so that you can look at a variety of scenarios and make the best decision for yourself. All right, now that you know that part of it, and you can now make an informed decision on if you move forward and purchase your leaps now or if you wait for it later. If you want the other half of it and you want a little bit of insight into when I am calling my signals, whether it be daily or weekly, then please feel free to click the link below, book a brief call, and you can join my Discord community, and you'll get to see my trades when I decide to sell covered calls against those leads. If you want to watch the original video that I made on this, where I constructed this and showed you exactly how to put it together, the prices are different, but it will give you a good baseline to actually go ahead and start putting these trades on. You can find that video right here. Remember, if you're with me, Trading with Ashley, there is no trader left behind. I will see you very soon. Happy Easter, everybody.